You are listening to ChartingWealth.com for Friday, the 9th of June, 2017. We see with the markets today, the S&P 500 was up 0.05%. The Qs, that is the NASDAQ 100, was down. Gold and bonds were both down for the day. And of course, we're going to be jumping into these charts first and foremost with the S&P 500. Now, those of you who are long-term investors or your financial advisors, if you've not already asked to participate in our course with the quarterly chart we have, that it unbelievably accurate tracking of the S&P 500 going back 20 plus years would have gotten you into the main up movements in the market through 2001, out before that big crash going through 2001, 2002, would have gotten you back into the market in mid to late 2004 to ride that up, and then when the market started to crash in 2008, would have gotten you out as the market started going down and gotten you back in for the big run up in the market there at late 2010, 2011. This is an unbelievably accurate and valuable chart. If you want to know how to use it, how to track it, how to use it potentially in the future, and again, we're an education firm, we want to educate you on how this chart works, then you can study it, and as you feel, you can make your own decisions about how to use it in the future. We're just an education firm, we're not a stock calling service, and we will not take any of that liability on. But if you're interested, please, first you have to be a subscriber to our daily charting podcast. You sign up for that at chartingwealth.com, and you need to send us an email after you've done that. If you're already a member, you don't have to sign up again, but we do need to hear from you. You need to email us, cw@chartingwealth.com. Tell us why you want to participate, and we will be happy to consider you for it. This is not for day traders. If you're a day trader and you also want to gather money over the long term, then sure, we'll be happy to consider you. But if you're a financial advisor or a long-term investor, you two in particular, we are very interested in sharing this with you. We do need to hear from you, know what you're about and why you'd like to take it, and then we'll let you know. We'll have that coming out here over the next week or so. Very important, very valuable, and we would like to share it with you. We're going to jump right into these charts now. We see on the S&P 500, of course, we had our weekly vertical crossover going up back on Friday, the 2nd of June. And of course, that Monday was our entry point. We've seen throughout the course of the week, we have a green up candle. Price movement is above that weekly trend line. Derivative oscillators continuing to gain energy. And ever so slightly, our price percent oscillator is moving up. As we hone into that 2-day chart, what do we see? Well, the 2-day chart has ended. The last candle is a bit of a red open box candle with a wick on top, not as strong as we would like to see. So we have a cautionary note there, but the derivative oscillator is continuing to move up, and the price percent oscillator is. So again, we really live and die on these indicators. Now, when we look at the 4-hour chart, this is of concern. We still are right around the entry price, but the market's really been sliding sideways. So what does that mean? Well, we like the market to take off. It could just be getting ready to gather steam, or it could be getting ready to keep moving down. Now, the bigger charts don't tell us that, but this 4-hour chart is continuing to gain downward momentum on the derivative oscillator, and the price percent oscillator kinked down even more during the afternoon, even though we really just have spinning tops for the last 3 indicators or so. Again, spinning tops mean indecision. So continue to watch. If this really starts to pull over, then, and particularly approaches the 2-day trend line, then you may very well wish to pull the plug if you jumped in on that weekly. Don't fret. You can always jump back in when the 4-hour chart rotates back over going up. So again, that's why we use all the charts all the time. Let's go back to this weekly chart. We will move on to the Qs, up 0.10% for the day. As we look at the weekly chart, we see that we continue to have green up candles the last 3 weeks, strong upward movement. See the PPOs continuing to move up, derivative oscillators continuing to gain energy. That's the weekly chart. As we look at the 2-day chart, we have nothing but a series of strong green candles moving up Over the last 4 days, we've had the derivative oscillator switch over, moving up. And of course, the price percent oscillator is continuing to move up. Now, as we hone a little bit deeper into that 4-hour chart, we see that same sideways sliding movement that we saw on the S&P 500 and the crossover on that 4-hour chart going down, and the derivative oscillator gaining energy. What do you need to do? Well, you need to pay attention to the profit that you have already made in your virtual trade from the time you got in, somewhere back about $136 or so, and you're up to about $143.50, $143.40. That is an incredible gain. You can always look to get back in when the 4-hour chart rotates back over going up. So continue to keep an eye on that 4-hour chart. Don't lose what you've gained. Now, back to the weekly chart and on to TLT. What do we see going on with the 20-year bond fund? Well, it was down a bit for the day, 0.26%. Again, we look at the weekly chart, still looks like it's going up nicely. Derivative oscillator is still holding its own. Price percent oscillator moving up. As we look at that 2-day chart, what do we see going on? Well, the 2-day chart's gone flat on us. Derivative oscillators lost energy. We have a spinning top, which means indecision. And we're sitting on that 2-day trend line. So that is of some concern. Of course, as we hone in even deeper, we see that we have a crossover. We talked about this on the previous broadcast. Crossover going down in the afternoon on Wednesday the 7th, and then 2 candles of down movement throughout the course of the day on the 8th. And again, the downward movement has pushed through the 2-day trend line, still above the weekly trend line. We don't like that. It's time to consider, if you've not already done so all the way back 2 days ago, well, a day ago, looking at locking in that profit that you already gained. You can always get back in when it crosses back over going up, as it did on the 4-hour chart back on the 30th. So again, pay attention, don't fret, don't be afraid to take a profit and wait for a better day. Again, you don't want to stay in something and lose everything you gained, while at the same time, you don't want to get out too soon. That's why we use all the charts all the time. Okay, lastly, we'll go to gold. It was down 0.65%. It was the most down for the day. And again, remember, stocks were up, TLT was down, the bonds were down, and gold was down. Although on the weekly chart, gold still looks nice. Derivative oscillator just switched over during the course of this week, moving up. PPO still looks nice and clean, moving up. As we look at that 2-day chart, we do see some problem there with a red open box candle, large wick on top, smaller wick on the bottom. Although the PPO has gone flat, derivative oscillators losing energy. Now remember, the biggest thing about gold is how prescient, how incredible that 4-hour chart is. Well, it crossed over going down in the afternoon. So, and it crossed over going down strong. Derivative oscillator actually crossed over at exactly the same time that the price percent oscillator crossed over. That's usually a strong sign. And we have a clean, firm crossover going down, which again should signal you that, hey, take my profit in gold and live to fight another day, potentially. So if you've not already pulled the plug on that, or even look for a down trade in gold, of course, what would that be? That would be getting something like DGZ, which of course crossed over going up. It's an inverse fund in gold. If you don't know what we're talking about, using inverse funds to make money when things are moving in opposite directions as the underlying principle, then you might want to go listen to our inverse ETF podcast that we have in the training section of the website. Folks, that's where we are as we end the day on Thursday, as we go into Friday, the 9th of June. We so appreciate you being with us. Those of you interested in Bitcoin, we actually have a new chart that we've put together that is incredibly helpful and accurate in charting Bitcoin. If you're interested in receiving that, please make sure that you sign up again for our daily charting podcast. You do that at chartingwealth.com. We'll be putting that out only to the people that subscribe to our podcast there at chartingwealth.com, to that daily market review that we do. Thank you so much, my friend. You have questions, problems, concerns, we're happy to hear from you. CW at chartingwealth.com. God bless. All the best from the whole team here.